All right, let us get started then. Okay, so you can see here at the beginning, welcome everybody. It's great to see you all. So our thought of the day, ships don't sink because of the water around them. They sink because of the water that gets in them. Don't let what's happening around you get in you and weigh you down and blur your focus. That is our thought of the day. All right, let us move into. Now, a couple of you yesterday were in a few trades. Let's go take a look at them. Okay, and you can see on this NASDAQ area coming from the weekly demand. And you can see right in there, you can see how when the bear market will hit bottom, this is a statement that had come out just basically on Monday. And you can see what has happened since that time. I've noticed that quite a bit with the news. Not only does that happen with this market, but it happens in other markets. The other one I was pointing out this morning was the dollar too as well. They pretty much said the same exact thing, which, you know, you're talking about we're entering a bear market and then the dollar hits an area of demand and prices continue to rally quite a bit from there, right? Oh, are you guys hearing something? Okay. Yeah. Are you guys hearing something that's not right? Let me just see what I can do here. Okay, is everything good? Okay, great. Okay, so you can see that ever since that came out, we had a very strong rally, a 900-point rally off of our weekly NASDAQ demand zone. Okay. Now, let's move into the next. Now, you can see, too, during our sessions, too, yesterday you had a long entry. And we also got in, and I'll show you a little bit as we move into the charts where this entry was. But you can see on the 4-hour chart, came down into a level of demand. Now, remember, too, if those of you that were with me on Tuesday, I said a few things that you want to remember. We had this rally off of demand on the higher time frame. However, the movement, there's a couple of things we had to watch out for. One was, you know, everything was looking good and people were getting better, but there was one issue where if we had something unknown, and the unknown came in was Spain, right? Spain became the one unknown that came in and said, you know, they have had more deaths than Italy. So even though other people were getting better, now all of a sudden you have another one that's coming in with higher deaths. So even though we're having this stimulus go on, there is still some bit of a hesitation in what it is. But we'll take a look at this area as we move on. I want to share with you another trade that that Sam Sided and I took and shared this with you. This is in the stock CLS. You can see a met entry a couple of days ago. We did hit our profit target. So you can see a very nice strong bounce, and also there's a possible re-entry at the 110. So you can see entering in that 99 region. Right, and then moving up into target and possible re-entry. Okay. All right, let's get into the charts. All right, so we're going to take a look at the S&P. So one thing that we were looking at this morning was if we take a look at the bigger picture of things, and we'll go out into, I'll come back to this area, but let's go out and take a look. If you take a look at where we are positioned, and this goes for quite a few markets today that I've looked at, and it's something that needs to be pointed out to you, just because you can see if you're basically taking trades within this area, they're not quite what we are looking for when we're looking for extreme. So we have been into this overall range for quite some time now. What we prefer is when prices that are at our key levels where the risk is low and the reward is high. That stacks our odds in our favor, right? And but then we can take action. Right now, this is not the case. So we can plan, we can wait. If you want to take areas in between, you got to take some quick profits, and be aware that a lot of choppiness can come in between, where you become into a little bit of a range situation, as prices, you can see, have made the new lows, come up to the top of the range. We've fallen back down into the middle of the range right now. So not usually our ideal situation. So I wanted to point that out before we continued on. And we bring this up quite a few times just so you know the conditions. All right, let me go back to. All right, so we're going to start with the S&P. We are still continuing to rally from the daily demand. So we are rallying up from the daily demand, and you can see that this movement up, we have made basically a little bit of a new high above this previous high. And now we are back down to this 2408, coming really from this 2170 area. Down below, you can see we do have a little bit of a tested area. So this is not a fresh area at this 2307.50 to the 2273.36. So remember, we had 2 days of gains in the Dow and the S&P. This is the first time since February 6th. And many people are comparing this 2-day gain to be the most impressive since the 1987 crash. But I do want to bring out one thing about that. Remember, too, where we started from with all of this, right? We have made all-time new highs inside of the stock market. Prices were so elevated in a lot of these stocks and the overall indices that you will have greater volatility. And so I believe it's a different scenario than previously, just because we have never been at these levels inside of history with the overall stock market. So you usually have 2 types of volatility that you're looking at. You have the implied which measures, the implied measures the VIX, which is the implied one, and the realized one is going to be your ATR. So both of those are at exceptionally high levels, but I do believe it's because of the overall situation. And the news adds to it, of course, with what's going on. We've never had this happen in history either, with the virus going on for a extended period of time. So those type of things are playing into the market as people look into today. Let's go into the so we still have our 240-minute zone up higher at the 278 to the 2838. And you know that we had the $2 trillion package that's mostly priced in. The House still needs to vote on it, but I would think for the majority part of it, they would want to go with it, since that would not look too good if things didn't pass through right. Supposedly Powell too is speaking today, which normally he doesn't come on to speak to the public about things in an interview, but he is giving an interview today. All right, so now let's move into the 60-minute supplies. And you can see too that is also much higher on the fresher end. We don't have to worry about that right now. You can see, but that is on the fresher end, coming in at the 3002 with the second level that moves up to the 3081. Okay, we will move into all right, so you can see so right now what we're having is we've hit down into this overnight low. This is still being created. So you can see that really overnight low, we still got about over an hour. And so as long as the markets continue to move down, the overnight low will continue to move down until at that 9:30 a.m. Eastern Standard Time. Overnight high, you can see too, that's coming in at the 2500 area, right above this candle here. Now we do have this level on the 10-minute. I didn't quite put it in just because of where it's located at. I believe it can work above the overnight high, but when I take it to a larger time frame, right, so you can see this area up at the 2532, 2551. The only thing though, you can see, as I stated at the very beginning, you can see where it is, right? This yesterday's high comes in right above into this previous high, which is almost at this little bit of a gap here, and so prices have continued to fall from that area. So to me, in the overall scheme of things, even though it looks fine on the 10-minute, it doesn't look that it's in the best position that we usually like. So that's one thing you want to worry, consider on that end on the 10-minute. Now you can see that also down below, we do have a gap that comes in much lower that started the whole rally out. We never made it back there. So if we do get a bigger drop in price, you can see a slight little gap coming in, and that's coming in at the 226.75 to the 2100. All right. So, we've had a wave of global stimulus that's pretty much been unprecedented. But also what's worrying people too is, is there a recession coming? So it's not something they're worrying immediately about, but it's definitely on everybody's mind. So even though a lot of these things are going on, that's still a big part of things that people are thinking about at the moment. All right. For that NASDAQ area, I'll just give you a quick little bit of a look on the smaller time frame first to show you exactly where we had to move in and move out. You can see coming in at that 4-hour area as we came into this in the overnight and started to rally out, and you can see where the areas where you are wanting to take profit, and you can see that so far we have fallen back right from the very first zone. And then, like I showed you before, we had these 2 other zones that you would also pay attention to. So they're all within this range, but you can see we can have inside of a weak market still a very opposing areas for supply. Okay. So to me, I don't believe there's a whole lot that we want to do too much more with the equities as we're sitting inside of the range this morning. Either you have been long from the daily area, and we'll take a look at this NASDAQ. Right, from the daily, from the NASDAQ, from the weekly. You can see here, I did draw this circle in because this looked like an area where we had to be careful of onto the NASDAQ. And you can see right now that is an area where we have actually already pulled back into and had a move out. So what I would watch for right now is, since we did have a hit of so if you take a look at it on this 120-minute chart, you can see that we are hanging into this demand and we are hanging into this supply. Should we start the market and we start to get a little bit more movement into, well, we can still hang on to demand, we more than likely can try to move up and try to take out some of these retested supply zones, move up more towards that gap again. Right now, you can see we're just stuck right in the middle. If we start to break down, more than likely you're going to have new supply that's also going to form, that's going to try to take you down further, back down to the lows where I showed you where that little gap was going to be as well, right? But you can see as we fell into this, what was right up above current price, and that's why prices now have fallen back and have come down into this area again. Okay. Right, so you can see too, this is above the overnight high. And right now, the overnight low is also still continue to be created right now. I wouldn't go too much into the different equities because they're all pretty much the same. The only thing too you'll have right now is that you could be gapping a little bit lower at the current moment. So you're going to be in between 2 gaps right now. If we are going to open lower, we're going to more likely have a gap supply up above and a gap demand down below. And we should be opening somewhere inside of there. So like I said, nothing too great until we start to get out of the extremes again as we come up to the higher supplies, or we move back down into the lower demands. Inside of here is not our best trading opportunities for the equities today. All right, let us move into some of the commodities. Let's start with the bonds. For the bonds, you can see that, so we're looking at this area on the 60-minute of the 30-year bond. We did have a nice fallout, came into an area of demand, and now we are sitting back towards the upper end of it again. So to me, the bonds are not moving a lot at the current moment. They have not shown to be a in great inverse or not inverse to the stock market. It's been basically a little bit quiet at the current moment as it starts to move into a little bit of a range to itself. And it's just trying to move from one supply to one demand. So it too, in this near term, does not have a lot of fresh quality right by it. We still have our lower demands. You can see in the 30-year at the 136.24 to the 136.16. And then into the 136.07, 135.29. You know, in my opinion, with what is going on. So what are we seeing, right? We are seeing, you know, instances where they're saying, okay, we're having some good things happening over in Asia. People are getting better. People are going back to work. So that we are seeing, right? Europe, though, we're having a bit of a mixture there, right? Italy's getting a little bit better, but it's still pretty at a pretty high rate. Spain has now become at a high rate. The UK is getting the, you know, you're too late. You're not acting fast enough. So we are getting mixtures coming in, but I do think for as far as right now, what I feel like the concern is, and that's going to be coming in the next couple of weeks, because obviously the stimulus is just going all around the globe right now. Everybody's just coming in and cutting and giving money, and so if that part is not with Spain is we may need something bigger than what they can provide on their own front. So that may go into an international type of thing. So if they need more monetary help, it may go into an international type of, you know, the IMF or so. So that remains to be seen as well. But what I feel like what's most important to us right now, if you take a look at in the U.S., New York has pretty much half of the cases of the whole U.S. in New York. So I feel like if New York can come out and prove, you know, within this next time before this Easter comes up, that it can somewhat contain it, and not we have, you know, we don't have too many deaths. If we can keep it to a low death thing, I believe people will feel a lot more comfortable with things, and then things will just continue to roll then. So right now, I think that looks like the sticking point for most of us, in at least on the U.S. part of things. So definitely watch out for that for the times to come. Okay, so on the bonds, I did want to point out something. Oh, you know what? Let's go to. This was actually our level from, yeah, this was our level on a 5-minute chart, though. I know it's on a 15-minute because we had two levels, if you remember. Did any of you long GC? I saw that comment. New York always likes all the attention, though. You know, when I'm in Jersey, it's always like New York this, New York that. So yeah, New York likes the attention. Yeah, so you can see this area here. We had two levels. First one was coming into a 5-minute area down at this 1612 to 1609. The lower one was coming in at 1551 to 1540. You can see, though, this area. So what I put here was that it was going to be a nice target coming in. You know, GC in general has been on a move higher, but you can see it's been a nice little target coming in, and this is the opposing area, and with also some new new demand down at the 1640. Okay, so it was a nice little low risk area, but you know what I noticed with people too is that if you take a look at this, all right. So we're just moving from supply to demand to supply, and then you can see we have new demand formed down below. But you can see, take a look at this, right? This time is right after the, you know, right about at the year or right before the European, but I'm not sure if they changed the daylight savings time yet. But you can see it's right around that time period. And what I noticed with people is like, well, I'm too afraid to put it in. I'm too afraid, and meanwhile you're sleeping and prices hit, and now we're up a good $40 or so, right? Yeah, and now we're up a good $40. So you may want to think about it too. A lot of times with these things, that a lot of them do come into it overnight, and you can see you'll miss out on certain things just because a lot of people are sleeping at that time. Now we still have the lower level, so still remember that one should prices come back. But like I said, we do have some new overnight demand that has formed. But you can see the lower level still at 1551 to 1540. Oh, I do have an announcement to make at the towards the end of the session, so watch out for that as we head down into towards the end of the session. Now I know a lot of you like crude, and but I do want to point out something about crude. So let's take a look at this picture here. When we're looking at it, what does anything point out to any of you? How would you deal with what? The overnight hitting? If you're talking about that, it's pretty simple. You just put in a OCO order. That's what Sam and I usually do. Just so, because as much as you're around the charts all day, you're not going to be every minute looking at things. So what we like to do, some entries are, yes, we are right there and it's meeting entry and we'll just get in like that. Other times, a lot of times is we know it's the level we want and we just put it out there. You got to remember too, these levels are not drawn just because, oh well, it's a level. Levels are drawn because that's where you want to take the trade, right? You want to take the trade at the near the proximal line and put your stop, depending if it's supply or demand above or below the distal line. So the levels are put up there for a reason, and they're because they are tradable levels, not because they're just levels that are thrown out there. But what I want to point out, so if any of you, again, bringing back to what we were talking about at the very beginning, when we take a look here, take a look at where our overnight high and low is, right? Our overnight low is still being created, still has about another 26 minutes to go yet before it finishes creating its overnight low. But if you see it right now, and the overnight high, right? Yeah, let's bring this out a little bit more. Right, if you see this right now, as we come in closer to the 20-25 area, as we come in lower to the 23 area, this overnight high and low is still within yesterday's high and low, right? So not only do you have a overnight high and low, but that's within yesterday's high and low, right? And this is basically the gap on this area is going to be the gap in the pit session. But you can just see this trading just inside of here, how difficult it is. So some of you may be trying to take some smaller time frame areas in here, maybe take some, let me try to, and before you know it, you're all chopped up inside of here. And meanwhile, all it did was it stayed within the range of yesterday's high and low, and then the overnight high and low, which is basically telling me that this is just getting tighter and tighter and tighter before it starts to expand again. So very hard trading inside of here. And that's something typically that we try not to do because we don't have that highest risk to reward inside of this overall area. All right. So I thought I would point that out to you just because of that scenario. Now let us go and take a look at platinum, I believe some of you might have went over that, but we'll take a look at it as well. And there you go. Okay, so we have a nice rebound in a lot of these metals. It is reacting off of a supply zone at the current moment. We have some new demand below current price that's 665.85 to 652.60, and then down at 630.50 to 610.70. And of course, above current price, we have our fresher supply zones. Since this one is hit on the lower end, that's higher up at the 857.67 to the 871.64. Okay. Now we will take a look at the dollar. You know what I want to do real quick? I just want to take a look what Europe's doing at the current moment. Okay, so Europe's kind of hanging in there. Not a huge drop back, pretty much what US is doing, but a little bit stronger. You can see they really did not break their low from the other day, so it's still hanging up pretty close to the highs here. So Europe is, I would say, still fairly strong at the moment prior to this open. And they've been going for a couple of hours already, so they haven't showed a great amount of selling pressure besides just coming off of the highs a little bit. All right, let's move to the dollar. So you can see here that the U.S. dollar has weakened off of our 180 minute supply zone. This U.S. dollar has weakened as it's priced in the aggressive fiscal stimulus. Remember too, this whole way up. So I remember when there were, analysts were calling, because we had this picture. We had this picture, and analysts started calling this, also a type of bear market, just like we saw in the first slide with the dollar. But I remember Sam calling this a demand zone, saying, we're coming into demand down here. And you can see since that time, prices have rallied right up into our 180 minute zone now. We have two things that the markets look at. You can see is the fiscal policy, a lot to do with your taxes and government spending, and you also have to do with your monetary policy, right? So basically your changes in your interest rates. And when you have, things that when they start to move together, that can cause some, they start to get a little bit confusing when they start to move together, right? So for now, you can see what has happened is as the dollars can continue to move up, and then when we take a look at it, all it's really done on the higher time frame. Move there for a second. All it's done on the higher time frame is also, you can see as it hit demand come up to the top of this previous area. So it also in a bit of a range too. It went to very high, deep into the middle range, but you can see that also in a bit of the range on the higher time frame. Now you can see as prices have continued to move down. Don't forget too, on this whole move up, we had a lot of surprise stimulus that came in, right? A lot of banks that across the globe that cut interest rates way before anything else was, before they were even supposed to, starting with the Fed and quite a few of them as we continue to move on. So this has been happening. So it's created a lot of up movement inside. But however, what I'm hearing is that it seems like most of the central bankers now do not want to go below 0% interest. So they've cut so low in most of these markets. And now as we come into other meetings that they're having, they don't want to cut below zero interest. So now you can see the dollar has fallen back. A little bit of a stock market rally, but the dollar's fallen back because now where are we going to go to next, right? So the dollar inside of this range now is coming back down again. You can see down below we have some demand coming in at 98.35 to 97.90, and then a little bit lower at 95.86 to 95.32. Right now on the 15-minute, we do have some supply that was formed. And why is this important? One, you can trade the dollar in the futures at the DX, or you can use it more of as an inverse to the euro, so EC. Okay, so you can see this is coming in with 3 levels on top of each other, starting at the 101.11 and moves all the way up into the 101.52. Okay, so with that, let us move into the euro. Okay, so when we take a look at that on the dollar side, so it's not going to be perfect. The euro is more or less, I believe, 57.6% of the dollar. So when you have that scenario, it's not going to be a perfect perfectly that when the dollar is going to hit, and then so sometimes what you have is the euro hit, the dollar didn't quite hit yet. So I would play them separately, but you can use them as a general guide to each other. So you can see down below you have these 2 levels on top of each other, 1.0891 down to the 1.0866 on the EC demand. Okay. And on our supply side, I see this area here. It just barely touched. You can still watch it again. I like that one just because it hasn't been back there before. So you can see that's 12090, 12529. Okay. I think you were asking about the dollar, the level. We'll go back to it. Just so I believe you're asking about the middle level inside of here. This area, it can work for you. I don't particularly like that prices have come down first before it moved back up. I mean, if the overall general level is really that strong, why did prices get back down there? So I'm a little bit, type of levels like these, I just watch it as they come in, and then if they start to, give a bit of a formation on the demand side with not too much supply above current price, then I'll like to take it, but I won't just take it right off the bat. And that will come in line with this upper euro too. So very well, we can definitely hold here again. But since it just, barely touched inside of here, I would wait and also see if there's a reason to get in. So same thing with that dollar on the same side of that. All right, let's move to CD. So with CD, we have a couple of things going on here. This one, actually the 60-minute on the real close didn't look like it already hit. We do have a 240 down below on the demand side that's coming in at the 69.73 to the 69.35. This area we were looking at this morning, you can see we don't have great dollar demand, so that's the only issue with it. But you can see we've already come into a little bit. We did have a little small drop out of the zone. You can see this area is the 70.76 to the 71.08. I'm going to take a look. Okay, so you can see with BP. So those of you, we were looking at this area. I'm not sure who, so if you were really watching it closely and was able to, so we were watching for the formation of this demand level, right? So it was in a blue circle because we were just starting to form this level. It didn't quite form yet, but you can see since we created this area, we created a very strong move to the top. Now, a lot of people, would they be scared to try to take it? Yeah, because the way prices have fallen in very quickly. But you can see, did hold on to this area after it did form. And for those of you, if you were, came in, looks like about yesterday afternoon. So you had to pay attention to this forming. And then you had to be ready to take it on the way back in. Right. Now you can see we have come in and we've hit. Is anybody taking any BP areas or British pound or spot market? Anybody in any longs or short on both sides? We do have a little bit of opposing level that's holding things up at the current moment here. But you can see we've had a pretty good move from the supply to demand inside of this market, and this is just off of the 30-minute chart here. And the reason why we're looking at these lower one, the lower one is because we had the dollar that was into supply. The upper one is because we are looking at two little levels on top of each other. Okay. All right. Okay, great. And if any of you has actually taken profit, if you ever want to share your risk to reward, you could also do that too as well. If you are in anything that you've already taken profit, or if you want to lay out what you're exactly trying to do, you're looking for 3-to-1 or 5-to-1, or you're looking for a short-term trade, things like that. But okay, excellent. Good job. Very good. Okay. Yeah, with this is because, remember what I said with the dollar, right? See, a lot of these markets right now, so what I'm going to do right now is I said I would go into this, this other workspace. And the reason why I bring up this other workspace is because this workspace, you can put levels on it. I don't have levels on it at the current moment. But what I am bringing with this workspace is this. What I get questions of the most is, okay, which market leads what and who has the highest volume and this and that. Because you can see Forex doesn't really give you volume. It doesn't really have the same thing like the equity markets where we say we're starting at 9:30 Eastern Standard Time and we're going to end at 4 or 4:15 Eastern Standard Time. Or we're going to have crude oil. We're going to start at 9 o'clock and end at 2:30. We're not going to have that with Forex. But one thing I will say with it is the more that you understand how we all affect each other, the better you will become at your overall trading, because your overall knowledge of everything comes together, right? So if you take a look at so I've even put in the spot market here. Remember too, with the spot market, if the dollar is going to be your first currency, then you are going to be inverse to the futures market, right? So anything that has the dollar, that's going to be your inverse. So you can see here, as we close the U.S. session stock market, we are coming into the Kiwi, right? So the New Zealand dollar starts its news, it starts trading and all as we are still into the close of the U.S. stock market. as we continue to roll on, we're going to go into closer to Asia. Once Asia comes in, that's where the Aussie comes in. The Aussie, the news starts to flow in during Asia time. And then with the Aussie and the yen, what happens is a lot of times their major reports start to come out during that midnight time. And that midnight time is important, Eastern Standard Time, because that's the time where they say, well, you know what, the whole world is sleeping. So if we can get some, it'll be the easiest time. I'm saying like they're talking to me, but that'll be the easiest time that we can move the markets for the least amount of money that we have to put in there, right? So that midnight time becomes a critical time for the Aussie and the yen to get out critical information such as rates and monetary policy. So as we move into Australia, now comes the yen, right? Because now the Asia market's open, so the yen becomes the next factor. Now when we come in, now we're going to come into the UK. So the DAX, the British pound, they're going to come in, right? As we come in next is going to be, actually I missed the Swissy. The Swissy should be in here with the euro. The Swissy and the euro is going to come in around that same time at night. And you'll see too, a lot of times when they have news too, it's going to be coming in during our pre-market session. So our pre-market time, for the Swissy, a lot of times what they like to do is, okay, let's go in at 6 o'clock a.m. Eastern Standard Time, because that's the time where we didn't have the early morning traders come in quite yet. People aren't at the office yet, and so let's put in some news through there. The euro, they're a little bit more dramatic. They like to come in when it's closer to just like the pound, right? Now you can see it coming into the peso, and then how did AD sneak in here? No, that's not supposed to be AD. No, that's not supposed to be AD. Forget this one. And then you can see the Canadian dollar is going to come into our session too, right? The Canadian dollar, a lot with the crude oil, and a lot of news comes in exactly the same time as our time. So this gives you a nice quick look around the world. You don't have to worry about, which ones be affected. Right now, when we have such huge dollar moves, you're going to have everything that's going to be affected by the dollar. But once things get back into normalcy again, you'll see that their GDP, their unemployment report, everything's going to come in as they're going to affect each currency as they come in. Another thing too, for those of you who didn't, say for instance, you don't know what time is the highest, you can just see if you put a little volume on, you'll see, hey, this is the highest trading time. This is the highest trading time. And you'll see that when it's not their trading time, that's where you get the lowest volume. So basically I created this mainly to help the people who are just either getting started in currencies or they don't understand currencies too much. And we can get into this a little bit more as time goes on, but this is just a general look of things as we continue on. Okay, so that's what I want to share with you today. And one other thing I do want to make an announcement of. So many of you are asking, what does the future hold for me? Obviously, I wanted to stay connected with all of you. So I did create this YouTube channel for basically an immediate solution. But I'm working on a more permanent solution. So I am really excited to tell you that I have seen this day coming for a while. I will definitely keep you all posted as we come into fruition. But for now, I'll keep doing it on YouTube. So next week's plan is to hold these sessions on YouTube every day at this time, Monday through Friday. Okay. All right. Excellent. Okay, so it was great seeing all of you today, and I will see you next week with more trades. And good job for those of you that took those trades.